This is video number 3 of my beginner series where I'm discussing a few of the basic options trading strategies. So if you're not a beginner, this video is not for you, unless of course you'd like a simple to understand refresher. Alright, let's get to it. Before I share and explain basic strategy number 3 for making money trading stock options, let me take 60 seconds to describe the basic components of a stock option. A stock option is a contractual agreement, so think of a contract or a document between two parties. In this case, there's going to be a seller of the stock option contract and a buyer of the stock option. Next, a stock option is bound to or refers to 100 shares of stock. The company stock that is associated with the stock option is known as the underlying stock. So for this example, the stock associated with the stock option is for company ABC Incorporated. The expiration date specifies when the option contract expires, and the specific time is at the market closing bell for that day. The strike price is the price that the seller and the buyer of the option agree to use for the execution of the option contract. Now that you've got a basic understanding of what a stock option is, right? It's an agreement between a buyer and a seller to trade an underlying stock at an agreed upon price, the strike price, on or before the expiration date. Whenever I talk about LEAPS options, one of the first questions I get from people is, what does LEAPS stand for? LEAPS is an acronym that stands for Long-Term Equity Anticipation Securities. This is usually followed by a question something like, what makes a LEAPS option special, unique, or different? As alluded to by the name, LEAPS are stock options that have a long expiration date. But what makes LEAPS options so unique, and depending on who you talk to, is that the expiration date will typically be 6 months or more away. But for my purposes, whenever I deal with LEAPS options, I'm using an expiration that's 1 year or more away. So other than the longer expiration date, everything else about the option contract stays the same. One of the immediate benefits of owning a LEAP is that you control 100 shares of stock without having to pay for those shares. But wait, what does that mean? I don't have to pay for the shares. Let me explain it like this with a quick example using Apple Incorporated. So here we see 100 shares of Apple stock, and the current price is $140. So in order for me to actually own those shares of stock, my cost to purchase would be $140 per share times the 100 shares, which would equal $14,000. Now compare this to a LEAPS option, where I would have the underlying stock being Apple Incorporated, and my expiration date would be a year or more away. So in this case, I've got January 19th of 2024, and I've specified a strike price of $140. Now, in order for me to own this LEAPS option, which would give me control of those same 100 shares of Apple stock, my cost to purchase this LEAPS option would be $29.80 per share, times the 100 shares, giving me a total cost of $2,980. So with ownership of this LEAPS option, I didn't have to pay the full price for 100 shares, remember the $14,000, but instead I only paid $2,980, and now I control 100 shares of Apple stock that I can sell or trade. So with this lower cost LEAPS option, I have the similar abilities just as if I had directly purchased 100 shares of Apple stock. Okay, now that I've talked a little bit about what LEAPS options are and the benefit of being able to control 100 shares without having to purchase them, let me now take a moment and describe how I make money with LEAPS options. This first technique is pretty simple and straightforward, and it's based off the philosophy of buying low and selling high. So I'm going to go ahead and buy and hold my LEAPS in order to earn a profit. And basically I use 3 steps. Step number 1, first I identify the underlying stock that I'm going to be using for my LEAPS option. And I want to find a stock that has huge growth and upside potential. Step number 2, I'm going to purchase the LEAPS option and specify an expiration date that's 1 year or more out. By picking an expiration that is so far into the future, it greatly reduces the theta time decay of the option. Additionally, the long expiration, it provides a significant amount of time for the share price to rise higher, and the intrinsic value of the option will also increase. And as a result of the increased intrinsic value, it now takes me to step number 3. It means that I can turn around and simply sell the LEAPS option for a profit. So as you can see, this technique is exactly the same approach that would be used for purchasing and holding direct ownership of stocks. So it's nothing new here, except that I'm able to take advantage of a stock and its appreciation without having to actually spend the money to own the stock. A little bit over a month ago, I purchased a LEAPS option for Lucid Group Incorporated, stock symbol LCID. This has a $5 strike price and an expiration date of January 20th of 2023. So you can see that I submitted my order on September 9th, and it was filled later that morning at 7:12 a.m. Pacific time. Now at the time, I needed to pay $15.15 to purchase this Leaps option, and when the option contract was filled, I ended up paying a total of $1,515 in order to own this Leaps option contract. Now let's fast forward to November 11th, 2021, 63 days after I purchased the Leaps option. Here we can see the current price for the Leaps option for stock symbol LCID with the $5 strike price and the expiration date of January 20th of 2023. This option contract is currently worth $40.20. So if I sold my Leaps today, would I make a profit? So let's look at the numbers and walk through the calculations. The current value of the Leaps option today is $4,020. In order to purchase this Leaps contract, I paid $1,515. And the difference between the two is my profit, which is $2,505. And that's a 165% return on my investment of 63 days. The key to my success here is that I was fortunate enough to pick a good stock that had some upside potential, plus I had some luck. And I'll be holding a live training session in November to show you exactly how I do it. Be sure to register for this free training session by visiting my website at simpleoptiontrading.com/picking stocks for options. Next, let's take a look at technique number 2 for how I can make a profit with this Leaps option. You'll notice here a button that says exercise this option. By pressing that button, it would allow me to exercise the option contract that I hold. So in other words, I would be able to purchase these shares, 100 shares of LCID, at the strike price, so $5 per share, even though the current price is well over $44. And then after exercising the contract and purchasing the shares, I can immediately turn around and sell those shares at the current market price. Here's a simple worksheet where we can compare the outcomes or profitability results for both of these techniques. But for right now, let's focus on technique number 2. This is my Leaps option analysis using technique number 2 for stock symbol LCID, which has a current market price of $45.01. Now with my $5 strike price, it would cost me $500 to actually exercise this option contract, at which point I would then own 100 shares of stock symbol LCID, and given the current market price, I should be able to immediately turn around and sell these shares and receive a total of $4,501 as my proceeds. From that, we would need to subtract the cost that I paid to purchase my Leaps option contract, which was $1,515. So my net profit from exercising this Leaps option would be $2,986. And here's the third technique that I can use for making money from my Leaps option. It's often referred to as the poor man's covered call. Give me a few minutes and I'll quickly describe it, just enough so that you'll understand how it works. So with the poor man's covered call, I own the Leaps option, which means I control 100 shares of the underlying stock. And because I control those 100 shares, it now gives me the ability to sell covered calls against those shares. So with those controlled shares and under my Leaps option, I'm going to sell short-term covered calls that are out of the money. And because the Leaps option has an expiration date so far in the future, it allows me to sell shorter-term covered calls, say weeklies or monthlies, on a continuous basis up until expiration. And each time I sell these short-term, out-of-the-money covered calls, I'm able to collect premiums. Now, as the expiration of my Leaps option contract comes closer, I have several options available. I can either exercise the option, I could sell that Leaps option, or buy to close my position. I've found that one of the keys to profitable option trading is being able to pick good stocks to work with. I've stated this many times that profitable option trading begins by picking good stocks. And as an option trader, you already have experienced the challenges, stress, and risks of picking a stock to use for your options trading. When investing in trading, it doesn't matter who you are or how much money you have, no one wants to lose money on a trade. To manage my fear, uncertainty, and doubt, I use a simple 3-step process to pick my stocks for option trading. In fact, I'll be hosting a 2-hour YouTube streaming session and demonstrating exactly what I do live and on camera. I'll walk you through each of the 3 steps. I'll share the websites that I use for research, and I'll also show you the tools I use to review and analyze each stock. Plus, I'll show you the exact buttons I push during this free live webinar. So be sure to register for this event so that you'll be notified with the final details, and I'll send you the special link to access this webinar for free. To register, just visit my website, simpleoptiontrading.com/picking stocks for options. If you like the information about my stock picks, then consider joining my Patreon, where I share exclusive videos of my stock picks every week that I'm going to be using for profitable trades. I also include my research notes, stock analysis, and trading strategies for every stock I pick to watch for that week. And of course, all my videos posted on my Patreon are ad-free. There's one last thing before I end this video. Now, making profits and generating an income from option trading is a great thing, but keep in mind that all gains made from trading are considered income and are subject to applicable tax considerations. So every month, I save a portion of the profits that I earned in order to pay for my federal and state taxes. So please consult with your CPA, licensed financial advisor, and/or tax preparer regarding the tax liabilities for your unique situation. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.